So you've heard our ads and you have a car loan with very high negative equity that you're trying to get out of so you can sell your car and get rid of your payment. And you want to know how it works. So we're going to describe it. It's 3 steps in order to get out of your car loan, to do a loan exit. Step number 1 is to reduce your payoff amount, reduce your principal. And you might say, well, gee, of course that makes sense, but how do I do that? I don't have the money to pay it down. Well, the good news is you don't have to. Remember that dealer where you bought your car? You're going to get them to pay down your principal value. How are you going to do that? Well, when you bought your car, that dealer agreed on a price, whatever the price is of the car, $30,000, $50,000, $60,000, whatever it was. And then when you went to finance the car, they said, hey, do you want some protection on your payment for warranty, for gap insurance, for other things? And they said, it's only $10 or $15 a month. And what they did was when you signed your loan, you signed it on an iPad. You didn't sign it on paper contracts. You signed it actually on an electronic tablet. What that means is when you actually signed it, your payment actually didn't go up $10 or $15. It was thousands of dollars worth of add-ons that were put on your loan. Things like appearance package, gap insurance, wheel protection, and the exact dollar amounts you probably didn't see, and you probably still don't know what they are. Here's an example on the screen of a client we're working with right now. Actually, we worked with them last month, of all of the add-ons that were put on their loan. Appearance protection, $1,000, windshield protection, $1,161, tire protection, $2,600. If you add them all up, it's $11,570. In fact, it's actually $12,500 because if you look about halfway down, there's gap protection, which isn't highlighted, which we didn't even include in this total. You may not have $12,000 on your loan, but you certainly have thousands of dollars. Here's the good news. Those can be canceled. Those can be taken off your loan. And by reducing your loan balance, by taking those add-ons off, then your loan balance gets lower, gets closer to your value. Step number 2, and there's more details on our website, but we'll get back to that in a minute. You get a higher offer for your car. What you've probably heard so far are trade-in offers from dealers where you're trying to trade in your car to get another car. Those trade-in offers are wholesale. Those are low auction values. In fact, they'll probably even take out the auction report when you went to the dealer and they said, look, here's what the auction they sell for. Auction is wholesale. Those are used car lowball bidders at auctions buying cars for cheap. Think about when you see the Storage Wars show on TV. They're bidding like an auction. And then how much are they worth afterwards? The things in those storage units, way more than what they were bid on. So you can get more for your car. You want to get resale offers, not wholesale offers. That's step number 2. And how to do these things, again, we'll get into. Step number 3 is there's probably still going to be a difference. Even if you cut your balance down and you get a higher offer, you're probably going to still have some money left over that's going to be negative equity. It won't be how much you think it is now, but it'll probably be a little bit left over. What do you do with that? Well, there's programs that you can use either with your current lender or a secondary lender, a unsecured lender, that can do an unsecured loan. Because here's the thing, even if you only have $2,000 or $3,000 negative equity left, if you can't cover that out of pocket, you can't sell your car. You might as well have $3 million negative equity if you have $3,000 that you can't pay. So you have to get rid of that, because your lender that you're paying payments to on the car right now will not release your title for you to sell it or trade it in until they get all their money. So you have to get that covered. And you can either ask them to do time payments, or maybe if you have $3,000 left, you say, look, I'll give you $100 a month for a few years, or maybe another lender will do an unsecured loan for the $3,000, same thing, $100 a month for a few years. Do those 3 things, get out of your car, get rid of that $800, $900, $1,000 payment, and then you can do this without repossession. If you make your payments, you can do it without destroying your credit. You also reduce your debt, so now your FICO score will probably go up because you have less debt, you have less payments. Your debt to income ratio will go up, so if you need another loan, you need to get a mortgage, you need to apply for an apartment, all these things are benefited from that. But those are the 3 steps. More details on how to do them on our website, loanexit.com. You can do it all yourself. We have a service if you'd like to have help with it. We can help you with those 3 steps. But those are the 3 ways to do it. Don't let the dealer that sold you your car continue to make that profit. They're going to try to talk you out of it. So you have to do all this in writing. You can't just call them up and say, cancel these things, because they're going to lose all that money by canceling them. So they may either pretend they didn't hear you. They may tell you you can't do it. They may tell you that they're only going to give you part of it. Don't let them talk you out of it. They're salespeople. You want to make sure it's done right in writing so that you get your full benefit, you cut your payoff, you increase your value, you cover the difference, you get out of your car loan, and then you're back to financial stability.